Hey, it's your man, Charlie P. You want to trade Forex? You want to learn how to make some money? So let's talk about it. I'm going to keep this super simple, not going into any intricacies that you don't need to know. So let's jump into it. In a nutshell, Forex is just the foreign exchange market. How much is the value of one currency versus another one? So this chart in particular tells me the value of the British pound versus the US dollar. So right now, if a person from Great Britain travels to the USA and they want to exchange their currency for ours, for every 1 British pound that they give us, we would give them back $1.26 in US dollars. That's the literal exchange rate right now. So basically your job is to look at a chart like this, analyze it, and determine whether if you think the value of the British pound is going to go up, then you would put in a buy. If you think it's going down, you're going to sell it. Keep in mind, this is not like the stock market where you invest in something and then you can only make money if the market's going up. And then when you want to get out of that investment, you put in a sale. This isn't the same. With Forex, you can make money whether the market's going up or down. You just need to make sure you have your direction correct, basically. So, but more specifically, the Forex market moves in what's called pips. So I need to show you how to count pips so this makes sense. So let's learn how to count pips real quick. Let's just say, for example, I put in a sale right here, and then I got out of the sale right here. Well, let's see how many pips this is real quick. Let's see, this is 1.2497. Let me pull up a notepad. 1.2497. And then this one, oh, that's 977. I'm tripping. And then this one down here is 1.2. I'm sorry, 1.24. And then this one down here is 1.24344. So 1.24344. All right. So the way that you count pips, you're going to keep, now this last number right here, that's a micro pip. This is where your pips start. So what I would do is I would completely ignore this last number and just focus. I like to use 3 numbers because it's just easier for me to count pips this way. So I would just say from that number, I would take 497. That's this one right here. I'm taking this 497, and then you got 434. That's what I'm taking out of that. That's all I see when I look in at those, when I'm looking at this number up here, all I really see is this right here. And I subtract that because I sold it. And so if I subtract that, that's going to give me 63 pips. And so that would be 63 pips of price movement. So when I look back at the chart from here to here, that's 63 pips. Okay, so that's 63 pips of price movement. How do I make money? Well, the way that you make money is you put down a risk per pip. So basically, I'm just going to apply a risk to my pips or my direction. So let's say, for example, I put in $1 of risk per pip. Well, that means for every pip the market moves, I'm going to make or lose $1, depending on if I got my direction correct. So if I sold this here, well, by the time it got down here, I would have made $63 because I put in $1 per pip. Or let's say I put in $100 per pip. Well, then I would have just made $6,300. Now, one thing you do need to know as far as, so I told you what pips are. That risk amount that I was just talking about, how I say you might put $1 of risk per pip, or you might put $100 of risk per pip. That's called a lot size. Whatever your risk amount is, that's a lot size. That's just some terminology you're going to need to know. But in general, though, that's really it. That's what trading Forex is. Determine whether the market's going up or down. Choose a lot size or a risk amount. And then the market's going to start moving and you're going to make or lose that risk amount per pip. Bam. That's it. Now, you might hear that and think to yourself, oh, that's just gambling. Nah, bruh. Gambling is throwing up a prayer. With Forex, if you're doing it correctly, you can learn how to analyze these charts and find the most probable direction based on your analysis. So that's what we're going to be learning how to do in future videos, is proper analysis to give you the best probable direction, so that it's an educated risk. Yes, risk is involved, but there's a very distinct difference between risk and gambling, though. We do not want to gamble. But before we can do all that, you got to get the chart first. So that's what we're going to talk about in the next video, is how to get what's called a demo account. So you're going to get this chart. I'm going to show you how to put fake money on that chart, because you don't want to start trading with real money when you don't know what you're doing, because you're just going to lose it all. You're going to get a demo account and be able to learn and practice with fake money until you feel comfortable, until you feel like you got it, you understand everything, then you can deposit real money. But so basically, next video, get this chart. The video after that, I'm gonna break down everything on, because this is what it's actually gonna look like. Let me go to a different one. Your chart's really gonna look like this. I'm gonna put some stuff on there that's gonna help you analyze it better, or the way that I trade. I can't speak for everybody. I'm only teaching you how I trade. So, this is my style. But I'm gonna show you how to get all of this, and we're gonna talk about what everything means. All right. So I'll holler at y'all on the next video.